Very good morning, my dear friends. Since last 4 lectures, we extremely discussed things related to amalgamation chapter. Am I right? From this lecture onwards, almost for 2 to 2.5 sessions, we are going to discuss things related to internal reconstruction. So somewhat the basic intro I already gave along with the chapter amalgamation. But even though that is not enough to understand clearly what is the meaning of internal reconstruction, what are the various activities generally occurred in case of internal reconstruction, what are the Companies Act 2013 provisions dealing with internal reconstruction, accordingly, which accounting treatment you should need to adopt, what are the various journal entries we should need to pass after completion of internal reconstruction, how to prepare the financials. Such all things we are going to discuss in this chapter. So let me directly entering into the chapter without wasting much time. Please all of you concentrate approximately for 30 minutes. Once you understand what really happening internally in this chapter, then you can enjoy throughout the session. Guys, let me take one example for better understanding, which is Rani Limited. Sir, what this company position is, this company is suffering from losses since past few years. So if it is suffering from losses, then under asset side, it have P&L account debit balance as per the old balance sheet, not as per the Schedule 3 format. So this is P&L debit balance. This is liability side. This is asset side. Apart from that, it has certain intangible assets as well. Certain book values are there for like goodwill, patents, trademarks, etc. It all have remaining other assets here, whatever you can call PPE, or those are current assets. So share capital, then other liabilities all are exist here. Now the thing is, why Rani Limited want to go for internal reconstruction? That is first question coming into our mind. As I already told you, the main reason for conducting internal reconstruction is the existing company financials are not depicting true picture. Am I right? Sir, what happens with the existing financials, sir? It's very simple. The assets worth for the book value, it is showing at certain figures. But do you think that is it true figures? Because huge P&L account debit balance is there, which is not a real asset. And that too certain intangible assets are exist in the Rani Limited, which are doesn't have any market value in the outside market. The reason is already the company is loss-making company. How you think that company will have certain amount of goodwill? So that means there is a overvaluation of net worth. Overvaluation of net worth. Now, to show all the assets and all the liabilities components at market values or at fair values before going for a liquidation, the final option available with the company is internal reconstruction. Sorry, if the company is suffering losses since past few liquidation, if shareholders will decide. Am I right? But before going for liquidation, the company as a last step, just it will try for the internal reconstruction. Now, you may have a doubt that, sir, really in case of internal reconstruction, what happens, sir? The first and foremost thing you know, the existing company doesn't liquidate. That means Rani Limited is going to continue their business activities on their own name. As like external reconstruction, a new company is not incorporated. The same company is going to continue their business activities, no doubt about it. But internally, what are the various activities conducted by Rani Limited as a process of internal reconstruction, sir? Number one, revaluation of assets and reassessment of liabilities is going to happen. Sir, due to the revaluation of assets and reassessment of liabilities, what will happen, sir? All the assets as well as liabilities will come for their virginal values, will come for the fair values due to this revaluation and reassessment of liabilities. Number two, it will also conduct certain compounding activities. Sir, what is the meaning of compounding, sir? Compounding means it made certain negotiation activities with the following parties. That is, for creditors, or maybe from debenture holders point of view, or maybe with bankers for bank loans, or from any other loan holders or any other liability party. They will make certain compounding activities. They will conduct certain meetings. So in such meetings, they will finalize that, sir, we can able to repay this much of amount only. We are unable to repay the entire amount because the company situation is not good. If the company is going to the liquidation, you may not fetch those values as well, because in case of liquidation of company, liquidator is going to settle to the various parties exist in such company based upon the cash availability with the liquidator. If the cash is unavailable to repay amount to the various parties till the date, till the closure, how much cash with him, with that quantum of money only he will distribute. For remaining persons, they may not get any single rupee. So that's why, by explaining all such things and by explaining the company position, they will make certain compounding activities by conducting certain meetings. So certain sacrifices are made by those parties, which is known as compounding activities with the loan holders or the liability holders. This is the major part in generally happen in case of internal reconstruction. Apart from that, one more important circumstance is also going to arise in case of internal reconstruction. They are having certain negotiations with shareholders as well. That means purely such shareholders, what they will do, sir? They can do only one thing. We can go for reduction in paid up capital. Reduction in paid up capital. Sir, a reduction in paid up capital means we are not paying any single rupee to the shareholder. Do you understand? Just we are asking shareholders that, okay, the face value is 10 rupees. Let us assume earlier each shareholder paid 10 rupees. Now what I am telling simply, out of 10 rupees, each and every shareholder should need to sacrifice to the extent of 3 rupees. Then automatically paid up value reduced to 7 rupees. And the company is getting profit to the extent of 3 rupees. Now, due to revaluation and reassessment of liabilities and the compounding activities and the reduction in paid up capital, company is attaining certain profits. Now, whatever the profits company is attaining through the process of internal reconstruction is ultimately utilized to set off the P&L account debit balance, which was accumulated since past few years. And it will also make it set off the profits which they arised for intangible assets, for unrepresented intangible assets, that too. Because even though the intangible assets are shown something in the balance sheet, those are not the real intangible assets. Those are unrepresented intangible assets. We are going to utilize the profits what we are getting through internal reconstruction process for the purpose of set off of P&L account debit balance and unrepresented intangible asset, etc., etc., etc. This is the base concept what really happens in case of internal reconstruction. Hope you understand the basic motto of the internal reconstruction before going into the technicality. Can I continue, guys? Are you with me, all of you? Guys, can I continue? Can I go with the really what happens as per Companies Act 2013? Or what are the different technicalities involved in case of internal reconstruction? Sir, before internal reconstruction, company have to take a permission from the tribunal. Yes, good point actually. That is a valid point. Let me explain how the internal reconstruction process happened in the legal mode. Okay, just a moment. Good doubt, ma. Who asked that doubt actually? Pius. Okay, come here. Sir, if you think that if this is a company, if a company wants to go for internal reconstruction, first what it will do, sir? First, it will conduct meeting with various parties or various stakeholders involved in that company. Sir, various parties or stakeholders means, they may conduct meetings with shareholders. They may conduct meeting with creditors, debenture holders, bankers, okay, may suppliers, yes, may customers, everything. They may conduct different meetings because our business organization is completely depending upon all these parties. In such meetings, what they will tell, what is our existing position, what the management thought process, I mean, how the internal reconstruction process is going to happen in the future, what are the terms and conditions levied in particular plan, everything will be discussed. Sir, it will not be completed as on a single day. It will be continued over a number of months or over a number of years based upon the size of the organization. Because somewhere management will take one proposal, then the shareholders may accept for that, may not accept for that. Do you understand? So like that, after making so many negotiations, then everyone will come to one single line. Do you understand? After accepting all such terms and conditions, now the plan will go to NCLT actually. Now NCLT will coming into the picture. Sir, what is NCLT, sir? You know, that is as per Companies Act 2013, various administrators are there to administer the company law. I can call it as regulators. So the best name is regulators. Various regulators are there as per the Companies Act 2013. Throughout the Companies Act 2013, you may listen the word ROC, Register of Companies, Regional Directors, RD, NCLT, National Company Law Tribunal, NCLAT, National Company Law Appellate Tribunal. Okay. If it is a listed company, then SEBI, all these are the regulators of the Companies Act 2013. Now, why not? NFRA, National Financial Reporting Authority, which is also one of the regulator, which plays the crucial role throughout the company life cycle. So NFRA right now is having those many powers after introduction of Companies Act 2013. So before NFRA, there is an organization called NACAS. If you listen, National Advisory Committee on Accounting Standards, but which was completely replaced with NFRA. In the olden days, NACA's scope is very less and their jurisdiction is also very less. Just it will propose certain accounting standards and company point of view, nothing more. But coming to the NFRA, right now, it will organize everything. It will regulate everything. If any fraudulent actions, if any internal errors, that can able to be reported by the NFIA. Okay, let it be, put it aside, all such things. Sir, ROC will be there in state jurisdiction point of view. I mean, in the state which you want to incorporate your company, then to the respective ROC, you should need to send all the forms and for the annual complaints and for all such stuff. Regional directors, I think so. For throughout India, there might be 7 regional directors are there. So for northern region, southern region, like that, depending upon the regions, the regional directors were appointed. National Company Law Tribunal is like court. How for the civil and criminal issues are going to resolve through the general courts as per the Constitution of India. Similarly, to administer, to resolve the issues as per Companies Act 2013, so NCLT was established. Like how you can think, if NCLT is a High Court, then NCLT is a Supreme Court. Like that you can think. I mean, based upon the powers, just I am telling. So National Company Law Appellate Tribunal is an ultimate authority in the company law. So SEBI, you know, which regulates the provisions related to that whatnot, everything. But it is in particular to the listed companies. No need to follow the SEBI regulations by the unlisted enterprises or unlisted companies. I already told you things related to NFRA somewhat. So all these are the regulators. Like that, coming to the internal reconstruction, which regulator I should need to meet, sir? NCLT, National Company Law Tribunal. What I should need to do? Company should need to take approval of plan. What they proposed after making various negotiations with the stakeholders of the company, the final plan will be there na. That final plan will send it to the NCLT. Then if NCLT provided approval, then only they should need to initiate the internal reconstruction process. Sir, why not, sir? In case of external reconstruction or amalgamation, without taking any approval from the NCLT, straight away we went. But here you are telling that NCLT approval is mandatory. If NCLT didn't provide any approval, then your company will not go for the internal reconstruction. Why? What is the reason? So the reason is very simple. Here various parties are impacted and we are making sacrifices with the, various parties of the organization are ready for sacrifice. In this process, if the company is unable to provide justice to any party, then ultimately who will lose, sir? Public money will lose. Then public may lose trust on the system of the company itself. That's why to avoid all such things with the existing resources of the company, how far it is justifiable to all the parties, NCLT will think. Then if NCLT feels that the plan is not justifiable, then it may send back to the company for making certain corrections. Then if company will make such corrections, then only NCLT will approve. That is the objective behind the sending a proposal for the approval. Hope you understand. Sir, after completion of approval, what should need to do, sir? Then company will start internal reconstruction process. Company will start internal reconstruction process. Then in this internal reconstruction process, really what happened we've seen, based upon that related to the financial accounting, what accounting adjustment we should need to do, we should think. So in this internal reconstruction process, only our entire concentration will be there. Next, after completion of internal reconstruction, company should need to prepare the financials as usual. Preparation of financial statements. At the time of preparing the financial statements, in fact, balance sheet, it should need to add the word and reduced. Like this, the whole entire internal reconstruction process will be completed. Guys, to complete the internal reconstruction process, sometimes it will take number of years, sometimes it will take number of months. So just put that point in your mind, because why I am telling number of times that point, you may think that, sir, internal reconstruction, so today everything happened, we will write the journal entries. So these are the academic classes. That's why the entire scenario just they may represent, we will record the journal entries at that point of time. But in various times, various transactions are occurred. Based upon the situations, the accounting treatment is going to made by the accountant anonymously. Like that, if transaction is there, then we will record. Like that, anonymously we are going to record. Repeatedly we are going to record. Okay, fine, just leave it. Sir, then in internal reconstruction, what are the various ways available, sir? What are the various ways of conducting internal reconstruction is available as per the Companies Act 2013? Just a moment. So simply, I can call it as methods of internal reconstruction. What are the various methods available to conduct the internal reconstruction, sir? Alteration of share capital, variation of shareholders' rights, reduction of share capital, compromise or arrangement, surrender of shares. All these are various methods available as per Companies Act 2013 to conduct the internal reconstruction. Sir, one by one, let us discuss quickly, guys. Come to my OneNote again. These are methods of internal reconstruction. Alteration of share capital. Next, variation in shareholders' rights. Then we've seen reduction of share capital, surrender of shares. Total 5 now we've seen. Compromised arrangement, which is very, very important. Compromise or arrangement. What it means, sir? Let me check one by one. Is first, you should need to differentiate alteration of share capital with reduction of share capital. Both are not same. In alteration of share capital, what happens, sir? In alteration of share capital, there may be increase in authorized share capital. There may be subdivision or consolidation of the shares. There may be conversion of share into stock or stock into share, that is vice versa. Sir, you know, for a company, bylaws in memo of association, it will clearly represents capital clause. In that capital clause, what is the maximum share capital can be issued by such company in the life of the company will also represent, we generally call it as authorized share capital. Am I right? Now, due to the process of internal reconstruction, there is a necessity to issue much more number of shares to augment the working capital, or maybe to issue such shares to the various parties of the company. Now, if it exceeds the existing authorized share capital, then what company will do, sir? Company can increase the authorized share capital? Yes, it is possible. It is nothing but alteration of MOA. There is a procedure for alteration of MOA, if you know, as per the Companies Act 2013. I don't want to go into the much legality. So just for alteration of memorandum of association, you should need to conduct the general meeting. So as per the provisions of the act, either you can take the ordinary resolution or the special resolution. Am I right? So like that, certain procedural issues you should need to conduct. Then you can alter the MOA. After alteration of MOA, the communication should need to be made with the relevant ROC by filing the so-and-so forms as per the Companies Act 2013. Am I right? So if you complete all such procedure, then you can increase your authorized share capital. Sir, is it increase in authorized share capital is also form part of internal reconstruction, sir? Yes. Why you are increasing your authorized share capital? That matters. But the purpose of issuing the number of shares, for the purpose of issuing the shares to the various parties, or to augment the working capital, or to get the excess money from the public. For that purpose, if you are increasing your authorized share capital, then it is form part of the internal reconstruction. Sir, but at the time of increase of authorized share capital, what is the accounting impact, sir? There is no impact. Even a single journal entry was not passed by your company. But at the time of presentation of financial statements, the impact is there. Now, while presenting the balance sheet under shareholders fund share capital, you should need to present with authorized share capital. Nah? There clearly you should need to increase your authorized share capital. And under notes to accounts also, you should need to provide the information as a process of internal reconstruction. We are increasing so and so number of shares. That's why our entire authorized share capital will become to those many number of shares. That much of amount. Like that, you should need to clearly represent. Coming to subdivision or consolidation of the shares, what happens, sir? There is no change in the share capital, yeah. But there is change in the number of shares and the face value. I will tell you, let us assume 1 lakh equity shares are there at present. Sir, each equity share face value is, let us assume 10 rupees. 1 lakh multiplied with 10 rupees means, which is 10 lakhs. Now the company wants to decide to subdivide each share into the 5 shares. Each share into the 5 shares means now the face value will become 2 rupees. Then how many number of shares it will come, guys? All of you, can you please tell me? Each share into 5 shares. Then 1 lakh shares will become 5 lakh shares. So 5 lakh equity shares at the rate of 2 rupees. Again, there is no change in the total paid up capital. What is the difference? Before subdivision, 1 lakh equity shares are there. But after subdivision, 5 lakh equity shares are there. Before subdivision, face value is 10 rupees. But after subdivision, face value is 2 rupees. Same thing I told you now. There is change in number of equity shares and face value, but there is no change in total paid up capital. Sir, consolidation means exactly reverse process will happen. Now, at the time of subdivision or consolidation, what is the journal entry, sir? I'll tell you, concentrate. Equity share capital account data. Sir, old face value how much? Just put it in the bracket, old face value 10 rupees. Now there is no change in the paid up capital 10 lakhs. To equity share capital, in bracket new face value 2 rupees 10 lakh. Literally, there is no impact after passing this journal entry to the financials. But the thing is, there is a change in number of equity shares as well as face value. The same thing you can put it under narration. Being each share is subdivided into 5 equity shares as a process of internal reconstruction. Over. Do you understand? Sir, for this subdivision or consolidation also, you may not go as like such that. Before doing such all things, you should need to create a general meeting. You should need to take the approval of the shareholders. Because once you go for subdivide or once you go for consolidation, there may be a chance of impacting the market value in the outside market. Because if you go for the subdivision, automatically the number of shares increase, na? Then the market size, that means the trading size, the trading volume is going to increase. Much more number of shares are available with the public. Do you understand? And in case of consolidation, what happened? So the market volume is going to decrease. Once you consolidate means the number of shares availability for the trading is decreased. So that's why it have either direct or indirect impact of the quotation price in the stock exchanges. That's why before going to all such things, you should need to take approval of the shareholders. So this is the impact in accounting perspective, and remaining all issues I don't want to concentrate. Next, come here, share into the stock or vice versa. Guys, do you know the difference between share and stock? Sir, stocks means it will cover everything, sir. Debenture is a stock, share is a stock, bond is a stock. Like that, I'm not asking. As per Companies Act 2013, there is a clear-cut difference between share and stock. Both are equity shareholders funds only, or both are shareholders funds only. Then what is the difference between share and stock? Please, at least one person give me answer. Let me check the query box. Sir, what is the benefit of doing subdivision and consolidation of shares in internal reconstruction? What is the advantage, na? Sir, during the process of internal reconstruction, we are making payments to various parties. For example, for creditors, I should need to issue certain equity shares. For example, earlier my equity share is 10 rupees face value. Creditors means not the one person. Various parties are there, na? Now, for example, just I'm telling, this is not applicable in that case. Sir, for a fraction of shares, we are unable to issue. For a fraction of shares, we are unable to issue. Then what we can do, we should require much more number of shares to split among the various parties. That is possible through subdivision. And one more thing I told you, due to subdivision, the market volume is going to increase. The number of traders will participate in purchase of that in purchasing the shares of that particular company. Do you understand? Those all will have impacting the existing financial structure of the company. So due to that background, only people will go for the subdivision or consolidation, not with any other reason. Okay. Okay. Josh is telling answer for my question. Sir, stock is like a group of 100 shares or 1000 shares. Oh, sir, especially for stock, there is no denomination. No denomination at all. For share, particular denomination is there. Sir, is it 10 rupees face value share? Is it 100 rupees face value share? Like that particular denomination will be there, like our currency. But for stock, there is no denomination at all. No denomination means any denomination of stock is possible. 1 lakh worth of stock is possible, sir? Yes, it is possible. Sir, is it 55,555 worth of stock is possible? Yes, it is possible. Now, another technical difference is share is not a negotiable instrument, but stock is a negotiable instrument. For example, if the stock is lying with me, that stock belongs to me. But if even though share is lying with me, that share doesn't belongs to me. Because on that share, on the face value itself, it is clearly represents in the dematerialized form who is the owner. Do you understand? That is another technical difference between share and stock. And one more thing, as per the Companies Act 2013, a company may not issue stock directly to the public. As per the Companies Act 2013, in the IPOs, initial public offers, no company is eligible to issue stock directly to the public. But if already company issued shares and such shares are fully paid up, and such shares are fully called up and fully paid up, then the company can go for conversion of share into the stock. And after conversion of stock, if company don't want to continue it as a stock, again it can able to convert into the share as well. Vice versa, both are possible. But in the initial public offer, no company is eligible to issue stock directly to the public. Then again, you may ask one more question. Sir, what is the advantage of conversion of share to stock and stock to share? Again, as what I told you, during the process of internal reconstruction, always people are going for distribution of money. That is distribution of shares. Something, certain preference shares, you might give to the creditors. You might issue to the banker. So if the existing shares are not possible, then you might convert into the stock. Simply any denomination of the stock you can easily transfer to the other party. So like that, further our convenience, just they are converting shares into the stock and stocks into the share. And again, I am telling you, due to this, really there is no impact in the financial statement, because both are shareholders funds only. Even the shares are also shown under share capital. Stock was also shown under the share capital. The only difference is shares are denominated in number of shares as well as face value. Stock was not denominated. That is the only one difference. Okay. Hope you understand the difference between share and stock and the advantages of conversion as well. Now, due to the impact of alteration of share capital, is it really company attaining any profits? What is our basic motto? Don't forget that. Sir, internal reconstruction process, why people are going to nullify the P&L account debit balance as well as to make it set off the unrepresented intangible assets. That is the basic objective. Do you think that due to alteration of share capital, company is attaining any profits in the process of internal reconstruction? No. So just we are changing the existing capital structure. That's it. Next, come to variation in shareholders' rights, guys, all of you. Guys, please bear with me initially for 30 minutes. The subject will be dry. But without explaining for such all things, if I directly go to the accounting treatment, it is not correct. So really what happening, if you know, then you can connect the journal entries quickly with the process. That is my objective. In case of variation in shareholders' rights. So simply, what is the meaning of variation in shareholder right? The shareholder right means, in generally, shareholders will have two rights. One is voting right. Another one is dividend right. One is voting right. Another one is dividend right. Now the variation means change. Let me take one example for dividend right. Sir, earlier, that is before occurring internal reconstruction process, the preference shareholders are cumulative preference shareholders. Cumulative preference shareholders. Now we are converting the cumulative preference shareholders into non-cumulative preference shares. Now what is the journal entry, sir? You should need to cancel cumulative preference share capital. If it is 10% preference share capital, let us assume 10% cumulative preference share capital account debtor to 10% non-cumulative preference share capital. That's it. Now there is no change in the paid up capital with respect to the preference share capital, but there is a change in that shareholders right. What is that change? Cumulative preference share capital means, or cumulative preference shareholders means, if any particular year company is not having sufficient profits to distribute the dividend, then if the preference shareholder is a cumulative preference shareholder, the company should need to pay in future years along with the past dividend. Then the company should need to pay dividend in future years related to that future year dividend plus past year's dividend as well. When the preference shares are cumulative preference shares, but if the preference shares are non-cumulative preference shares, then company is not retaining any sufficient profits. Then in that particular year, company will not distribute any dividend and no need to pay the same dividend in the future as well. Do you understand? So this is simply change in shareholders right only, like that participative to non-participative, or maybe 8% preference shares to 6% preference shares, like that. Such all things you can call it as a variation in shareholders right. Then you may ask one question, sir, there is a possibility of variation in equity shareholders right as well. What are the examples you take until now? All examples are related to preference shareholders. Now I am asking, sir, is there any change in variation in equity shareholder right? Is it possible? First of all, I'm asking one question to all of you. Is there any possibility to issue different class of equity shares? Is there any possibility to issue different class of equity shares? What is the meaning of different class, sir? Class A equity shares, Class B equity shares. So these equity shareholders will have different rights from other equity shareholders. Is it possible? That is my question. Please, at least one person give the reply, guys. Is it possible? Is it different class of equity shareholders? Is it possible? Differential voting rights. That's correct. There is a one chapter, I think so. Buyback of equity shares and differential voting rights. Am I right? In that chapter, you may come across the concept of differential voting rights with respect to equity shareholders as well. Yes, it is possible. Class A shareholders will have the voting rights different from Class B voting rights, or Class A shareholders will have different participation level from Class B shareholders. That is possible. Now, if our company, sir, in detail again, I don't want to go because somewhere some chapter is there. In that chapter, the faculty will clearly discuss how each equity shareholder class will get different rights from the other equity shareholders class, how it happens. You might already come across with that chapter. Now, I will tell you the final conclusion. For example, now in the company, management want to convert Class A shareholders to Class B equity shareholders. Then what is the journal entry, sir? There is no change in any journal entry. Just by at the time of presenting the balance sheet, or at the time of distribution of the dividend, at the time of participating in the general meeting, now Class A converted into Class B means according to their voting rights, they will participate. That is the only thing will happen. For accounting related, there is no accounting treatment. There is no need to pass any journal entry. But internally, for the purpose of distribution of dividend or for the purpose of participation in the general meetings, according to their voting rights or according to their dividend rights, you should need to consider. Do you understand? Again, sir, due to change in variation of shareholders' right, do you attaining any profit for internal reconstruction? No. So my conclusion is, due to alteration of share capital and due to variation in shareholders' right, due to both the methods, there is no profit to the organization to set off the P&L account debit balance and to set off the unrepresented intangible assets. Now let me go for other methods of internal reconstruction. Let us check in such methods we are retaining any profits from internal reconstruction or not. Come to reduction of share capital. Reduction of share capital. Just a moment, guys. So reduction of share capital, it may occur in three ways. Reduction through cancellation of unpaid value. Reduction through cancellation of unpaid value. Conversion of what you can call conversion of partly paid up shares into, that is here itself. Just a moment, I'm so sorry. This is reduction through cancellation of unpaid value only. How it happened? Through conversion of partly paid up shares. Through partly paid up shares into fully paid up shares. Just a moment. First, let me finish the writing. After that, I will explain what really happens here. Next, reduction through payment of cash. Reduction through payment of cash. Next, cancellation of paid up value. So total 3 different situations I'm explaining in reduction of share capital. Sir, first of all, what is the meaning of reduction of share capital, sir? It's very simple. Reduction of share capital means reduction in capital. Reduction in capital, simply. In which capital, sir? Is there a reduction in authorized share capital? Is there a reduction in paid up value? Or is there any reduction in called up capital? In which thing I should need to check, sir? Reduction in capital means, sir, reduction in capital means majorly it may be the paid up value, it may be the other capital as well, but our main focus is on paid up capital. But the reduction in authorized share capital or the reduction in other capitals, we can also call it as reduction of share capital only. But if you observe, increase in authorized share capital or conversion of what you can call shares into stock or stock into the share, or else where it is another mode, what it is, either subdivision or consolidation, whatever the thing you can consider. In case of alteration of share capital, I am not talking about anything related to reduction. In fact, there is no change in the paid up value at that case. If you increase the authorized share capital, paid up capital doesn't change. Sir, if you go for conversion, paid up capital doesn't change. If you go for subdivision or consolidation, again, paid up capital doesn't change. But in case of reduction of share capital, there may be a chance of reduction in paid up value as well. That paid up value may be reduced for the existing paid up value, or the paid up value may be reduction for the future paid up capital, anything. First, let me go into the situation, then you can easily understand what happens here. Sir, let us assume 10 rupees will be the face value. How many number of shares, sir? 1 lakh shares are there. Out of 10 rupees, 8 rupees was paid up. 8 rupees was paid up. Now what the company want to do? The company is going to cancel remaining 2 rupees unpaid value. Remaining 2 rupees unpaid value. Sir, how the 10 rupees share, how the 10 rupees face value is going to cancel or is going to reduce with 2 rupees? How it is possible, sir? Because 8 rupees paid up value means in our books of accounts already share capital is showing at 1 lakh into 8, which is 8 lakhs. But the face value is 10 rupees. That means still there is a possibility to call in the future to the extent of 2 lakhs. Now that right want to lose the company. Company don't want to make it call further. Then how it is possible, sir? It's very simple. If you can convert the 10 rupees face value into the 8 rupees face value as fully paid up, then the company will have no right to call any further amount from the shareholders. That means what happened really here? The partly paid up shares are going to convert into the fully paid up shares. Now the journal entry is equity share capital account debtor. Earlier face value how much? 10 rupees. Paid up capital is same, 8 lakhs. To equity share capital, now paid up value is how much? 8 rupees, 8 lakhs. Sir, if you are seeing the journal entry, there is no impact to the financials. I too agree. But lot of changes were occurred. Abnormal changes was occurred. Do you know what the abnormal change? Earlier the face value was 10 rupees, but right now the face value is 8 rupees. The company lose one of the biggest opportunity. If the company wants any money to procure the funds, company can go for call to the extent of the paid up value. But right now company is losing that opportunity. This is a clear-cut reduction of capital only. Even though you are thinking that for the existing paid up capital, there is no change, but still company is losing the opportunity to make a call in the future. The biggest opportunity is lost by the company. That's why it is definitely there is a reduction in capital only. But even though due to this situation, company will not get any profits. In fact, company is getting certain indirect loss. Maybe for books of accounts, I unable to show, but that opportunity I forgot. But the opportunity right now I'm not getting, right? So that's why definitely it is a big blow for the company. Fine. You can come to reduction through payment of cash. It's very simple. Let me take the same example. 1 lakh shares are there, 10 rupees face value, 10 rupees is the paid up value. Let us assume. Now the company want to convert each and every equity share into 8 rupees. But how such 8 rupees is going to become? Through payment of 2 rupees cash to each and every equity shareholder. Then what is the journal entry, sir? Equity share capital account debtor. First 1 lakh into 10 rupees paid up, that is 10 lakhs. Face value earlier 10 rupees. Now to equity share capital. Now the face value will become 8 rupees, which is 1 lakh into 8 means 8 lakhs. Sir, what about remaining 2 lakhs, sir? It paid in the form of cash to bank 2 lakhs. Sir, you may ask one question. Company was already loss-making company, sir. Company suffering from huge losses. We are going for internal reconstruction process ultimately to avoid such losses only. But till now, what are the process you are adopting? Nowhere we are attaining any profits. Due to making payment of certain amount to the equity shareholders, what advantage you are getting, sir, here? What advantage you are getting? You may ask one question like that. Sir, equity shareholders may not accept for all terms and conditions of the management as simply what the management said. The reason is equity shareholders are the real owners of the company. They contributed something into the company. But right now, I know company is definitely suffering from losses. So certain shareholders, they may provided certain money to the company long back. So in shareholders also different classes are there. Then Sir, since long back we are existing, right? So that's why you should need to provide certain privilege to me. We will agree for your terms and conditions, or we will lose certain money at later point of time when right now, at least if you pay 2 rupees to me. So like that, shareholders may also demand. We don't know how such terms and conditions will be. So accordingly, the terms and conditions, various situations will coming into the picture. So at that point of time, the company may go for payment of cash. So like that, it may happen. Do you understand? So don't imagine a single situation and put the same thing into your mind. If you are rigid in that nature, then you may not handle all these situations. That's why anything will come. In case of internal reconstruction, further issue of capital may also occur. Reduction of capital may also occur. Further introduction, you will augment the working capital, you may get the cash. Reduction through payment of cash, then you may follow the situation of making payment something to the shareholders as well. All will coming into the picture. Okay, so let me explain the last situation, which is very, very important. Before the break, this is the last concept I'm dealing. Concentrate, guys. So reduction through cancellation of paid up value. What is the meaning of this? So reduction through cancellation of paid up value again going to occur in two different ways. One is reduction in paid up value as well as face value. And the other situation is reduction in paid up value but not in face value. So one situation is reduction in paid up value as well as face value, and the other situation is reduction in paid up value but not in face value. We can't understand, sir. Let me take one example. Sir, number of equity shares 1 lakh, face value 10 rupees, paid up value also 10 rupees, fully paid up, let us assume. Now reduction in paid up value and face value. Now company conducted a general meeting and they start making negotiations with the equity shareholders. And the company is asking that, sir, you all are fully paid up equity shareholders only, right? You know the situation of the company. Please, all of you sacrifice 2 rupees per share. Please, all of you sacrifice 2 rupees per share. Then, based upon the final negotiations, shareholders agreed for that. Then what is the accounting treatment I should need to make in that particular situation? Now the company decided to reduce paid up value to 8 rupees as well as face value to also 8 rupees. Paid up value is 8 rupees. Then face value is also 8 rupees. That is reduction in paid up value as well as face value. Now the accounting treatment is equity share capital account debtor. Equity share capital account debtor to reconstruction account. How much, guys? Can you please tell me, all of you, how much amount? 1 lakh into 2 rupees, which is 2 lakhs. So what is this reconstruction, sir? Suddenly, just a moment. First, I will cancel the entire existing equity share capital 1 lakh into 10, which is 10 lakhs. Now the new equity share capital is 8 rupees. 8 into 1 lakh, which is 8 lakhs. Now there is a reduction in paid up value as well as face value. Am I right? Now what happens? I will tell you here. So 10 rupees paid up value as well as face value converted into 8 rupees paid up value as well as 8 rupees face value. Now due to which how much profit really enjoyed by the company? Per share 2 rupees. The profit or loss, whatever the management is getting during the process of internal reconstruction, simply they are transferred to one temporary account, which is either reconstruction account or a capital reduction account. But throughout the problem, you should need to follow the same account. If you are transferring to reconstruction, please all of you follow the same reconstruction account for all the journal entries. If you want to adopt the capital reduction account, then you can adopt the capital reduction account. Anyway, any account you can use. I don't have any objection. If you want, you can use X account, Y account also. I don't have any objection because which is a temporary account. But to represent which is a profit or loss, just we are always using either reconstruction account or capital reduction account. As a practice, just we are using. Finally, we will check after completion of entire internal reconstruction process. Then we will check how much balance is there under the reconstruction account. Now the balance under reconstruction account we are utilizing to set off. We are utilizing to set off the P&L account debit balance. Here, where it is there, here the P&L account debit balance and the unrepresented intangible assets and other assets. That is the basic motto and the basic objective. Now let me finish the next situation. Here itself, only one situation we see now. There is a reduction in paid up value and face value we seen. Now the second situation, reduction in paid up value, but not in face value. Then what is the journal entry, sir? Equity share capital account data to reconstruction account, 2 lakhs, that's it. Don't cancel the existing face value and no need to credit the new face value. Why, sir? Existing face value, how much? 10 rupees. New face value also how much? 10 rupees only. Because there is a reduction in paid up value. We reduced the paid up value, but not in face value. That's why no need to create the new face value, no need to cancel the existing face value. That's why I'm not thinking about the 8 rupees per share. I'm only thinking about 2 rupees per share. That is equity share capital account data to reconstruction account. If you wrote, then that is enough. No need to raise the new face value, no need to cancel the existing face value, because existing face value is 10 rupees, new face value is also 10 rupees. Then the basic difference between reduction in paid up value and face value and reduction in paid up value but not in face value is, in case of reduction in paid up value and face value, we should need to cancel the entire existing face value. We should need to make it credit the new face value. But reduction in paid up value but not in face value, we are not at all touching the overall face value of the share. To that extent of sacrifice made by the shareholder, just we can make it transfer to the reconstruction account. With the same amount, we should need to cancel the equity share capital. That's why the entry is equity share capital account to reconstruction account. Sir, for the problems, whenever they are talking about something is sacrificed by the equity shareholders, unless otherwise specifically mentioned, always we are thinking that there is a reduction in paid up value as well as reduction in face value. One more time repeating, unless otherwise specifically mentioned, always we can presume that there is a reduction in paid up value as well as face value also. So that means the entry is equity share capital account to reconstruction to new equity share capital. Like that you should need to provide. But if it is clearly given that, sir, there is a reduction in paid up value but not in face value, then you may pass the second case of entry, equity share capital account to reconstruction account. Do you understand, all of you? Any doubt, guys, here? Quickly tell me before going for the break. Just a second. Just a second. You can go for the break. Just a moment, all of you. Come down. Yeah. Reduction of share capital. For this national company law tribunal, approval plus special resolution should be required. So this may happen through 3 different situations. Conversion of partly paid up shares into fully paid up shares through reduction of unpaid capital. We already checked. So now there is no change in the paid up capital here. That's there is a change in the face value. That is reduction of unpaid capital through conversion of partly paid up shares into fully paid up shares. Example also we seen here, different example just I gave. Reduction through payment to shareholders. Here just we are reducing the face value as well as paid up capital through payment of cash. And the third case is reduction through cancellation of paid up capital. That is something sacrifice made by the shareholders. Reduction in paid up value, but not in face value. There is only reduction in paid up value, but not in face value. That is second scenario. First I gave. So entry is equity share capital to reconstruction. Now, reduction in paid up value as well as face value. Then the total face value you should need to cancel first. Equity share capital, 10 rupees face value to equity share capital, which is the new face value, to the capital reduction account or to reconstruction account, whatever the thing, you can just make it credit. That is the difference. Is it okay, guys? Now all of you can go for the break. Please, all of you assemble exactly by 8:15. Welcome back, guys. Up to reduction of share capital we completed, right? Guys, after the break, all the concepts are interesting concepts only. From here onwards, whatever the concept I'm dealing, which have much more impact on the problem, concentrate. So the next issue is compromise or arrangement, right? Which is also one of the method of internal reconstruction. Sir, what is the meaning of compromise or arrangement, sir? Sir, compromise or arrangement is an agreement. It is an agreement entered between company and the outside party of the company. So the outside party means, as I told you, a loan or liability holders, in generally creditors or the debenture holders or the loan parties, etc. Anyone. Now, compromise or arrangement is an agreement entered between company and the outside party of the company. Now, the outside party of the company is ready to sacrifice, is ready to forgone something out of the amount payable to them, or something out of the amount receivable to them in their point of view, if you're talking. Now, why they are given two different concepts, sir? That is, one is compromise and another one is arrangement. So by seeing the word, we can easily understand compromise means something they are losing. That's okay, fine, we understand. Then why they are giving the word, different words, compromise and arrangement? The thing is, in case of compromise, certain dispute will be there. I mean, dispute means company and the outside parties, they will not directly come with a single line. I mean, sir, company is proposing that, sir, so and so creditors, you should need to sacrifice to the extent of 50%. Then the creditors may not accept for that percentage. They will make so many negotiations. After resolving all such disputes, finally they will derive one particular percentage, one particular amount of the sacrifice. Then if that is the case, then we can call it as compromise. Arrangement means straight away for the proposed offer by the company or for the proposed plan, the people are directly accepting, then we can call it as arrangement. So I'm not going to the technicalities, guys. What is the real meaning of compromise and arrangement as per the Companies Act 2013? You may come across in your CA final company law, where various case laws you might come across things related to compromise and arrangement, whether it is a case of compromise, whether it is a case of arrangement, is there really any compromise exist or not? So different cases are there as per the Companies Act 2013. We are not checking such all things. Our concentration here is on mainly what sacrifice made, how much sacrifice made, based on that, what is the accounting impact. Am I right? Now, for this compromise or arrangement majorly leads to certain internal reconstruction profit. We already seen in case of reduction of share capital, except for reduction through cancellation of paid up value, that is something sacrifice made by the shareholders, for the remaining two situations, there is no profit. So reduction through cancellation of unpaid value, there is no profit. Reduction through payment of cash, there is no profit. But reduction through cancellation of paid up value, which is happened through sacrifice made by the shareholders, if any point of time sacrifice is there, then management will attain, our company is going to attain certain profits out of internal reconstruction process. Similarly, now during the process of compromise and arrangement, straight away company is getting certain profit. That's why there is a chance or there is a scope of recording reconstruction account profit or loss. Now, let us see different situations for better understanding. Sir, debentures. 10% debentures is there in my organization for 5 lakhs. Now, what the negotiation we made or what the deal we entered with the 10% debenture holders is, out of this 10% debentures, 50% is, let us assume, they are ready to sacrifice. To the extent of 50% is debenture holders ready to sacrifice. provided for the remaining 50% is they're expecting equity shares. They don't want to continue as a debenture holders, just they want to continue as a equity shareholders. Why they are ready to sacrifice? In future, they want to contribute into the profits of the company. They are not expecting interest. Do you understand? This is the deal. Now, what is the accounting entry I should need to pass at this stage, sir? No doubt about it. You should need to cancel the 10% debentures, which is existing. Should need to debit the 5 lakhs to the extent of the sacrifice. You should need to transfer to reconstruction account. Credit the reconstruction because it is a profit. 50% means 2,50,000. For the remaining 50% is they're expecting the equity shares. You can make it credit the equity share capital, which is 2,50,000. So the entry 10% debentures account to reconstruction account to equity share capital account is the journal entry. Is it okay, guys? Nothing is great here. Let me give one more situation. Take the same 10% debentures for 5 lakh. But right now, what the thing is, to the extent of 50% is shareholders ready to sacrifice, provided company issue 2 lakhs worth of equity shares to the debenture holders, to the sacrificed debenture holders, to the sacrificed debenture holders. For the remaining 50% is as like in the same situation, just they are continue to expect equity shares. That's why company is expecting equity shares for the other 50%. Let us assume. Now, what is the journal entry, sir? Again, I'm repeating the case. 10% debentures is 5 lakh. To the extent of 50% is ready to sacrifice, provided the company issue 2 lakh worth of equity shares to the sacrificed debenture holders, and for the remaining other 50% debentures, company is going to issue the equity shares. Now, my question is it real sacrifice made by the debenture holders is 2.5 lakh? Do you think that? Do you think that really the debenture holders are ready to sacrifice 2.5 lakh? No. Sir, gross sacrifice 5 lakh into 50% is equal to 2.5 lakh. What they are telling, okay, sir, we are ready to lose 2.5 lakh, but provided as a result, we are expecting how much from you? 2 lakhs worth of equity shares I'm expecting. 2 lakhs worth of equity shares I'm expecting means, which is additional burden on the company. Sir, for company profit is 2.5 lakh, burden is 2 lakhs. What is the net sacrifice then? Net sacrifice is only 50,000. This 50,000 only you should need to transfer to the reconstruction account. Sir, about this remaining 50%, there is no profit, no loss, no need to think. Just debentures will cancel, equity share capital will credit. Sir, now what is the journal entry, sir? First, you should need to cancel the 10% debentures account, which is for 5 lakh. Sir, net sacrifice how much? 50,000, na? That portion only you can transfer to reconstruction account. So reconstruction account, 50,000 you can make it transfer to equity share capital. 2 lakhs for the purpose of sacrifice, and for the remaining 50% is 2.5 lakh. Total 2 lakhs plus 2.5 lakh, 4,50,000. Sir, from this case, what I want to conclude, whenever a particular party is ready to sacrifice something, then in providing of sacrifice, is there really they are expecting anything? You should need to check. If they're expecting anything at that point of time, to that extent of net sacrifice only, you should need to transfer to reconstruction account. For the gross sacrifice, don't make it transfer to the reconstruction account. The net sacrifice you should need to check, to that extent only you should need to transfer to the reconstruction account. But for the other portion, if they're expecting anything, they are not sacrificing anything, sir, that is different story. In that other portion, there is no sacrifice, there is no involvement of reconstruction account. Is it okay, guys, all of you? Is it understandable to everyone? Understand, guys? Getting it? At least one person. Can you please confirm through your chat box? Guys, Sharon, I know you are asking continuously something related to illustration number 10 and practical problem 2 related to amalgamation doubt. I'll do one thing, Sharon. Okay, because for problems which doubt you have, I don't know. Because you may not communicate properly with me, you may not type that much of content as well. What you can do, I already provided my email to you, right? So please make it your query through the email, then I can clearly understand properly. I'll give good reply as well. Okay, so if at all, if anything is necessary, then I can provide it as an attachment as well. Okay, fine. It is right? It is clear, right? And let me continue. Still the discussion is not at end. What I'm going to discuss, something related to unrecorded asset and liability. Let me write liability this side. Liability and asset. Sir, during the process of internal reconstruction, we come across certain unrecorded liabilities, sir. Certain unrecorded liability means till now, which is not recorded in the books of accounts, but right now we recognize it as a liability. Or you may call it as a unrecorded liability, or there may be a chance of recording a liability right now. So unrecorded means company is really not making any mistakes. It actually involves two situations. Company might ignoring that liability right now we are recording. That is one case. Or another case, company is not really doing any, company is not committed any mistake in past. But what happens, the internal reconstruction situations demands to record that liability. How it happens, sir? I'll tell you the example, just wait. But before proceeding with the example, if it is the unrecorded liability related to our financial accounting, what is the normal journal entry, sir? If you want to record any liability in the books of accounts right now, what is the entry? Always the entry is P&L to liability. If you are recording the liability, you should need to decrease the profit. That is the only chance. P&L to liability is the entry to recording any liability, unrecorded liability. Now here, during the process of internal reconstruction, if you derive any profit or loss, you are always using the reconstruction account. You know that. Now first to record the liability, the entry is P&L to unrecorded liability or simply to liability account. Let us assume the liability value is for 5 lakhs. The liability worth is for 5 lakhs. Now the point is, out of this 5 lakhs, entire 5 lakhs is sacrificed by the liability holder. Let us assume this is here P&L, not P&L, reconstruction to liability na entry. Reconstruction accounted are to liability. Now the entire 5 lakhs is sacrificed by the liability holder. Then what is the journal entry? Liability accounted are to the extent of sacrifice. I should need to transfer to reconstruction account 5 lakhs. Sir, reconstruction debit, reconstruction credit, liability credit, liability debit. That's why no entry. If any unrecorded liability sacrificed by the other party, then there is no entry in our books of accounts. No, sir, let me take the different situation for the unrecorded liability. Unrecorded liability to the extent of 5 lakhs, first we recorded. That is reconstruction to liability, first I recorded for 5 lakhs. Now out of this 5 lakh, we are paying as a full and final settlement to the extent of 2 lakhs. Then entry liability 5 lakh to bank. Let us assume full and final settlement 2 lakhs. For the remaining amount, reconstruction 3 lakhs. Now reconstruction cancel to the extent of 3 lakh only. So tell me guys, reconstruction to liability, liability to bank to reconstruction means for the liability portion entirely debited. For the liability portion entirely debited. But for the reconstruction to the extent of debit, how much? 5 lakh. To the extent of bank, how much? 2 lakhs. Reconstruction credit, how much? 3 lakhs. Net debit or net credit? Net debit, reconstruction account debtor. How much is the net debit? 5 lakhs minus 3 lakhs, 2 lakhs. To bank, 2 lakhs. Actually, no need to record and no need to make it payment. Just for understanding, I'm telling you, net entry, if you can pass, this is more than enough. then what my conclusion is, if any unrecorded liabilities exist, to the extent of the settlement value, you should need to pass one entry, which is reconstruction to bank. If it is entirely sacrificed, no entry. If you settled something, then reconstruction to bank. That's it. Do you agree, all of you? If you have any doubt, first record it, then make the final settlement. Accordingly, you know the final entry. Sir, similarly, coming to the asset, if any unrecorded asset is there, which is realized in the outside market, with that realization value, the entry is bank to reconstruction. Exactly in opposite manner, you should need to write now. Bank to reconstruction account with which value? Realizable value, irrespective of the book value. Or if you're not agreeing my terms, first record it. If you want to record the asset to reconstruction is the entry. Let us assume book value is 5 lakhs. Now the asset was realized in the outside market for 6 lakhs. Let us assume. Then the entry bank account are 6 lakh to asset 5 lakhs. Again, you are getting profit now through sale of asset to reconstruction 1 lakh. Now asset 5 lakh, debit credit cancel. Now what is the net entry? Bank 6 lakhs, here realization 5, here realization 1, total 6. So the net entry is bank account data to realization account 6 lakhs. The same thing I informed you. Now the conclusion part, if any unrecorded liability discharged to the extent of the discharged amount, reconstruction to bank. If any unrecorded asset realized in the outside market, bank to realization at the rate of realizable value. That's it. Is it okay? Next. Any other thing I forgot? Hope I covered everything. But still I am in methods of internal reconstruction only. If you check, so many things we discussed, things related to compromise and arrangement. So right now, the unrecorded liability and unrecorded asset will also coming under that part only. Except surrender of shares concept, everything explained. Surrender of shares I don't want to take in the today's session. We'll take in the last session, that is in the tomorrow session. We will do the problem on surrender of shares as well in that session itself. Fine. Now come down. Sir, after completion of this entire internal reconstruction, what should I need to check, sir? You should need to find out the balance in reconstruction account. You should need to find out the balance in reconstruction account. Now, the balance in reconstruction account, in generally, it have the credit balance that represents the profit. If you have the more losses, then you have the debit balance. But the objective of conducting the internal reconstruction is to get the credit balance under reconstruction only. First, you should need to find out how much balance is there. Whether it is informed in the problem or not, irrespective of such fact, the balance in reconstruction account, you should need to utilize to set off the P&L account debit balance. So let us assume reconstruction account, I have 5 lakhs, sir. In P&L account debit balance, I may end up with 3 lakhs, sir. Now this 5 lakhs, you can set off with the 3 lakhs by passing the entry reconstruction account debtor. 5 lakhs to P&L 3 lakhs. P&L having debit balance, that's why while cancelling, it should need to be created. What about the other 2 lakhs, sir? Reconstruction is nothing but capital profit. So always the capital profit, what you are getting after nullifying with the P&L, you should need to transfer to capital reserve only. Capital profit means capital reserve, that is 2 lakhs. Whether it is mentioned in the problem or not. Do you understand? Sir, apart from the P&L account debit balance, you may also end up with certain unrepresented intangible assets as well. Na? If it is clearly mentioned in the problem, sir, the intangible asset which is shown in the balance sheet was unrepresented. Sir, it is showing at books 1 lakh, but the market value is only 10,000 in the outside market right now. If like that, it is clearly mentioned, then to the extent of difference or for the entire intangible asset, also you should need to nullify with the reconstruction account when if it is mentioned in the problem. For P&L account debit balance, whether it is mentioned or not, you should need to shut off, because till now, whatever the process I am developing, that is only for the purpose of making set off the P&L account debit balance. But if it is clearly mentioned that intangible asset is unrepresented, you should need to set off, then only you can go for cancellation of intangible asset with reconstruction account. Otherwise, no need to cancel. That intangible asset is represented intangible asset only that have the good market value in the outside market. Do you understand all of this point? You may have another doubt. Sir, if reconstruction balance is more than the P&L account, then that's good. Super, we understand everything. For example, reconstruction balance itself is 2 lakhs, sir. P&L account balance is 3 lakhs, sir. Then what can I do, sir, at that point of time? To the extent of reconstruction, first you can set off. After set off, still P&L account debit balance, how much you have? 1 lakh. What I should need to do, sir? You should need to check any other reserves are exist. Any other reserves are exist or not exist. Sir, certain other reserves are exist, sir. Then cancel that reserves, debit this P&L. Sir, there are no other reserves, sir. You are purely loss-making company. There are no reserves. Then you should need to continue the same P&L account debit balance. What you can do? Whatever you can do the best, you already made it through the process of internal reconstruction. Maybe you entirely changed the company structure, right? You in future years, you may get the profits, then automatically the debit balance will be converted as a credit balance. Just hold for up to that time. That thing only you can do it, right? Next. After completion of internal reconstruction, you should need to prepare the balance sheet by adding the word and reduced. And reduced. At the time of preparation of balance sheet, you should need to think in each and every component angle. Because after recording the journal entries, what is the existing equity share capital after passing or after completion of this entire internal reconstruction, how the equity share capital will become, what extent it will become. Is there any change in the face value? Such all things you should need to work out. Accordingly, the total equity share capital you should need to work out. Simply preference share capital also you should need to work out. If you make it total, then you will get share capital. Under reserves and surplus, if any balance is there under reconstruction account, then capital reserve will come. There is no balance, sir. Still P&L account is going to continue, sir. Certain debit balance, such P&L account debit balance also you should need to show. Do you understand? Most probably under reserves and surplus, capital reserve will come if still some balance is there under reconstruction. Okay, so the P&L account debit balance doesn't come because it is going to nullify with the reconstruction account. If anything is there, just we will continue to record. Next, remaining long-term borrowings. Sir, debentures, how it got impacted? Any new debentures issued? For existing debentures, how they got reduced? Is there any reduction in paid up value? Is there any reduction in face value? Like that, similarly, you should need to check. Remaining all liabilities and coming to all other assets, you should need to clearly work out each and everything. What is the impact? Actually, I forgot to inform you one thing. Sir, during the process of internal reconstruction, there is a chance of occurring revaluation and reassessment of assets and reassessment of liabilities. Na? For example, this is revaluation of assets. This is reassessment of liabilities. Sir, if revaluation of assets means two possibilities are there, upward revaluation and downward revaluation. If it is upward revaluation, what is the journal entry, sir? Asset to reconstruction, which is a profit situation. Na? If it is a downward revaluation, the journal entry is reconstruction to asset. Similarly, related to reassessment of liabilities, upward revaluation and downward revaluation. Upward reassessment or downward reassessment. If it is upward reassessment, what is the journal entry? Reconstruction to liability, which is loss to the organization. If it is downward revaluation of liability, then liability to reconstruction. Such components also you should take into consideration while passing the journal entries. Do you understand? After completion of all these things, you should need to check how much balance there in the reconstruction account, irrespective of the fact whether mentioned in the problem. You should need to set off the P&L account debit balance with the reconstruction account. Still, if you have any balance, remaining balance, you should need to transfer to capital reserve. If intangible assets clearly given, you should need to set off, then only you can go for cancellation. Otherwise, you should need to continue to show in the balance sheet. While presenting the balance sheet, each and every component you should need to take into consideration. So presentation of balance sheet under internal reconstruction process is the art. No one can tell, sir, which format, which direction I should need to follow, sir. No, you should need to consider each and every situation into the balance sheet. Each and every journal entry into the balance sheet. Accordingly, you should need to develop. If we see certain problems, then you can easily understand how it should need to be built up. Okay, fine. Without wasting much time, let me go into my material, guys. All of you come here quickly. What are the different issues till now what I have discussed? Sir, in case of internal reconstruction, there is a revaluation of assets, reassessment of liabilities. and compounding activities with creditors, debentures, and bank loan and various parties, then we are getting profits out of which we are nullifying the P&L account, debit balance, and intangible assets. And a reduction in paid up value also is going to occur in case of reconstruction process. Sir, we also seen how the procedure is going to occur. In generally, the scheme is going to be prepared by the company after making so many negotiations with the various parties or the stakeholders of the company. Then it's sent for the approval. After getting approval from the NCLT, company will go for the reconstruction process. Then at the time of presentation of financial statements, preparation of financial statement, they are using the word unreduced. Sir, methods of internal reconstruction also we've seen in case of alteration of share capital, increase in authorized share capital, subdivision or conversion of shares into stock, all will coming into the picture, and where the articles of association and ordinary resolution in the general meeting should be required as per the Companies Act 2013 compliance procedure. Related to variation of shareholders' rights, there may be variation with respect to dividend, variation with respect to voting. So various examples also are given: cumulative to non-cumulative, participative to non-participative, class A to class B in case of equity shares. Reduction of share capital, where we seen conversion of partly paid up equity shares into fully paid up equity shares through reduction of unpaid capital, and the reduction through payment to shareholders. In these two situations, there is no involvement of reconstruction account because there is no real sacrifice. But in case of reduction through cancellation of the paid up capital, here something sacrificed by the shareholders, the reduction may happen face value but not in paid up value. Sorry, reduction may happen in paid up value but not in face value, both paid up value as well as face value. Sir, if the reduction is in paid up value but not in the face value, then to the extent of reduction, simply you can make it transfer to the reconstruction account. Both the reduction in paid up value as well as face value, then you should need to cancel the existing face value. You should need to credit to the new face value. The difference you can transfer to the reconstruction account. Then compromise or arrangement also we've seen. Compromise or arrangement is an agreement between the company and the other party. Maybe a shareholder, maybe other liability holder, or anyone will sacrifice out of the amount outstanding from the company. Sir, the difference between compromise and arrangement is, so in arrangement straight away they will agree. In compromise, after making so many negotiations, they are agree. So different examples also we've seen. I don't want to repeat. Unrecorded asset liability concept also I seen. I forgot to tell you one thing actually here. I told you na, in which particular situation unrecorded liability will coming into the picture. Majorly, if the preference shares are cumulative preference shares. If the preference shares are cumulative preference shares, the company is a loss-making company. That's why the company may not distribute dividend to the preference shareholders for past few years. Then at that point of time, due to their nature, preference shareholders have a right to ask that money in the future years as well. Now, during the process of internal reconstruction, the entire cumulative preference dividend, they definitely want to record it as an unrecorded liability. To be frankly speaking, cumulative preference dividend is not a liability at all. It is not a liability at all. That is the reason why company was not recorded in the books of accounts. There is no mistake done by the company as well. But during the process of internal reconstruction, at the time of making negotiations with the preference shareholders, first definitely they will ask for this cumulative preference dividend. That's why we are treating it as an unrecorded liability. Do you understand? If for such cumulative preference dividend, preference shareholders ready to sacrifice, no need to record. Reason, we already told you, if the liability is entirely sacrificed, then there is no impact. If you want to record, first record it, reconstruction to liability, then a reconstruction to preference dividend payable, then preference dividend payable to reconstruction. That's why there is no impact. No, sir, out of the 4 years, let us assume 3 years sacrificed. 1 year they're expecting in the form of equity shares. Then reconstruction to equity share capital is the entry. They're expecting in the form of bank. Reconstruction to bank is the entry. So that point I clearly mentioned through the notes. Unrecorded liability, which is arrears of cumulative preference dividend. Sir, if the entire amount is sacrificed, no entry. If it is settled, with which value it is going to be settled, you need to check. With that value, the entry is reconstruction to cash is the entry. Do you understand? So conclusion clearly given. If unrecorded liability is settled at book value or greater than book value or less than book value, entry does not change and the amount is settlement value only. If it is entirely sacrificed, no entry. So certain important points. Sir, in alteration of share capital, variation of shareholders' rights, there is no involvement of reconstruction account. We seen in alteration of share capital, increase in authorized share capital, conversions will only happen. In variation of shareholders' right, the dividend rights or the voting rights will only change. It doesn't involve any reconstruction account. But reduction of capital and compromise and arrangement, there is an involvement of reconstruction account. That is one observation we've seen. Sir, balance in reconstruction account should be applied to set off the P&L account debit balance. After that, if any balance exists under the reconstruction account, it should be transferred to the capital reserve account. Am I right? Sir, any intangible assets and other unrepresented assets, if it is specifically mentioned to cancel such assets during the internal reconstruction, then only we should need to cancel such intangible assets. Otherwise, you should need to continue to show such intangible assets in the balance sheet. At the time of preparation of balance sheet, you should need to use the word unreduced. Then revaluation of assets and a reassessment of liabilities, upward and downward revaluations. What is the impact also we've seen. Am I right? Is it clear to all of you guys related to theory before proceeding with the problem? Sir, if both intangible assets and debit balance of P&L are there and reconstruction profit is not enough, then which should be set off first? Always P&L. Always P&L. First, you should need to set off the P&L account debit balance. If it is not enough to set off the intangible assets, then you are unable to set off. Okay. Don't worry. In the problem, accordingly, they will tell you how much balance still remaining after making set off with the P&L. To that extent of balance in reconstruction only you can able to apply with the intangible assets. Like that they will provide. Okay, no worries. Fine. Yeah, please take one problem on internal reconstruction. I'm taking right now itself. Let us go for problem number 3. Let me take one big problem first, because problem number 1 and problem number 2, there is no involvement of reconstruction. Those are related to alteration of share capitals and conversion of shares into stock, like that. We will take up it later. Those are small problems. Please, all of you come to problem number 3, guys. I think so. Summer impacted, yeah. Because a lot of humidity is there at my place, and continuously I should need to go for water. Such all things indirectly conveying that summer was started. What about you guys? What is the situation from your end? Summer or winter? Sir, whenever we started classes, every day will be summer only now. Huh? I know at the student stage how much pressure you are handling. I know it's too difficult to handle your daily routine as well as your classes and preparation. All such stuff is too much of difficult process. So whenever I'm clearing my CA exams, I also think in the same mode. First of all, the books and the burden and everything will come out of our mind. Anyway, after that also we are always seeing the acts and everything. But the pain is completely different. That is before qualification, what the pain really we are facing is different. And after the qualification, what we are getting is different. But just believe me, guys, one thing, definitely a qualification is your life-changing moment. Whatever the case, I mean, to whom you can go if you want, just you can go. You can ask the chartered accountants who already qualified. Sir, before qualification, what about their lifestyle? What about their thought process? After the qualification, what about them? You might see. But guys, just believe me, if you want to continue into this course, CA Inter will create a deciding factor. CA Inter will be acting as a deciding factor. Because if you at least qualify the CA Inter, then you will be in the course. Because after completion of your CA inter, even though if you are struggling to close CA final, still you are having good opportunities in the market. At least you have a ray of hope. It will be completed in the next attempt or in the next more attempt. There is a chance. But even though you are not qualified at all, still you may not lose. You are getting good opportunities, numerous opportunities in the market, even though as a semi-qualified chartered accountants. Here, not my intention is, so don't complete CA, not like that. Just I'm telling you. But if you are wiped out from CA inter itself, you may not be suitable for the course at all. Whatever the time you spent till now, which is useless for you. That's why it's my sincere advice to all of you. Please, all of you, complete the CA inter and make it prepare well and do work hard and analyze the things. So even though your distractions and all other things coming into your mind, put aside for some time. Give your entire time to your course itself, for your preparation itself, for your classes itself. Is it okay, guys? Fine. Let me take up certain doubts before going to the problem. So many persons are telling something. Sir, summer, okay. Oh, from different states. Some of the state members, they are telling, sir, it is cold, it is summer, like that. So once a newly qualified CA said that the climb was tough, but the view from top is worth it. Yes, absolutely. Semi-qualified means that if you qualified for CA inter and completion of articles, then you can treat it as a semi-qualified CS. Okay. Fine. Sir, I have a doubt about how to read the question on balance sheet of companies. While reading the question, if you are observing, you know how I will read. As I am reading the each and every point with the amounts? No. So just I am always reading the balance sheet, the outlines. Outlines means that's actually a good point he raised. For example, this is the balance sheet. This is actually not the real balance sheet as well, just they are given the direct information. According to the chapter, which chapter you are doing, it depends how you should need to read the balance sheet information. Sometimes the balance sheet information face value should be create the crucial role. For example, in amalgamation, if you check, purchasing company is going to issue at so and so issue price to the existing equity shareholders. Then how many equity shares are there? How much face value is there? How many number of shares I'm issuing? That's why their face value and number is important. Do you understand? For certain items, no need to put our concentration because certain assets directly taken over by the purchasing company at the book values only. No need to think. No need to think about amounts and such all other stuff. If you go to some other chapter like internal reconstruction, if you're coming here, each and every component is important because a lot of issues are impacting here. Here also some of the assets and some of the liabilities may not be touched by the management. Those are as it is will coming into the balance sheet. No need to think much about such things. So accordingly, the problem for which you are doing will place a solution how to read the problem. Will place a solution for reading of the problem. Do you understand? So please, all of you habituate such things also, inculcate such things also during your preparation itself. Okay, without wasting much time, let me entering into problem number 3, guys. The balance sheet of A and a company limited as on 31st December 2011 is as follows. First, let me read the requirement directly. You are requested to show the journal entries reflecting the above transactions, including the cash transactions, and prepare the balance sheet of the company after completion of the scheme. After completion of the scheme. Okay. The scheme means the proposed scheme, which was approved, which is now approved scheme. Then company initiated the internal reconstruction process. After that, at the time of preparation of financials, we are using the word and reduced. For such internal reconstruction procedure, we should need to provide the journal entries. After that, need to prepare the balance sheet. Fixed assets, which is old problem. Right now, we should need to represent it as PPE. Freehold property given, plant given, patent given, goodwill. If you check, intangible asset was also there. Patent and goodwill both are intangible assets. Trade investments are there. Okay. Under current assets, trade receivables given. Inventory. P&L account debit balance is there, 5,35,000. If you check now, I'm highlighting the P&L account. Why? If you seen while reading the problem for amalgamation, I'm not highlighting P&L. I never highlighted. Why now I am highlighting the P&L? Because the balance in P&L I should need to nullify with the reconstruction account. That's why I'm checking. Next, come to liabilities under the share capital. 4,000 6% cumulative preference shares 100 each are there. 75,000 equity shares 10 rupees face value is there. 6% debentures secured on the freehold property. So these debentures secured on the freehold property means here freehold property we check na. This freehold property provided as a security for debenture holders. Okay. Accrued interest on such debentures was given, and current liabilities, bank OD, trade payable, director's loan. The court. Here, what is the meaning of court? NCLT. Approved a scheme of reorganization, which is nothing but reconstruction. Reorganization is nothing but reconstruction to take effect on 1/1/2012, whereby the preference shares to be written down to 75 rupees each and equity shares to 2 rupees each. Now, if you observe, preference share capital face value is 100. Now, each and every 100 rupees written down to 75 rupees. If nothing was mentioned, we can always presume that there is a reduction in paid up value as well as face value. I already told you. That means for reduction in preference share capital, what is the entry we should need to pass, sir? Concentrate here, all of you, which is problem number 3. Just simultaneously, I'm providing the entries while reading the information given in the problem itself. First, there's something talking about preference shareholders, right? Now, existing preference share capital is 4 lakhs. 6% cumulative preference share capital is given at 4 lakhs. Now, each existing face value is 100. Now, what we are doing, we are making reduced to 75 rupees. Now, the entry existing 6% cumulative preference share capital, you should need to cancel. In bracket 10 rupees face value, total amount is 4 lakhs. Sorry, 100 rupees face value, total amount is 4 lakhs. To new 6% cumulative preference share capital, now the face value and the paid up value will become to 75 each. Then let me know 4,000 into 75. 3 lakh. What about the remaining balance, which is profit to the organization? You should need to send to the reconstruction account, which is 1 lakh. Am I right? Similarly, if you come for the equity shares, 2 rupees each. Sir, for equity shares, what happened? If you check, the existing equity share capital is 7,50,000. So face value is how much, sir? Face value is 10 rupees. Now, which was reduced to 2 rupees each. That is 8 rupees sacrifice is there. Now, equity share capital account debtor. Again, you should need to cancel the entire face value for 7,50,000 to new equity share capital 2 rupees face value. How many number of equity shares are there? 75,000. 75,000 into 2 means 1,50,000. So remaining balance is to reconstruction account 75,000 into 8, which will be 6 lakhs. Like this, you should need to pass the entries. Next, come down. Guys, is there any doubt? Point number 1 is self-explanatory actually. No need to provide much details here. Simply to the extent of sacrifice made by the shareholders, you can transfer to reconstruction account. Unless otherwise specifically mentioned, always we can presume that there is a reduction in paid up value as well as face value of the preference share dividends, which are in arrears for 4 years. Unrecorded liability. 3/4 to be waived. 3/4 to be waived means 3/4 to be sacrificed. And equity shares of rupees T each, 2 rupees each, to be allotted for the remaining quarter. First of all, let me go to one note. He's talking about arrears of cumulative preference dividend. Total for 4 years, he is talking. Per annum dividend is how much? You can cross check. 6% into 4 lakh, which is 24,000. Now, out of which 3/4 is sacrificed. 3/4 is sacrificed. So 3/4 is sacrificed means 3 into 24,000 is sacrificed. For that, no entry. For the remaining 1/4 means 24,000. For the 24,000, what they're expecting? Just a moment. Come down. 3/4 to be waived and remaining 1/4 equity shares of rupees 2 each to be allotted for the remaining quarter. Just now you converted your face value to 2 rupees now. Whatever the shares you can issue, in further you should need to issue at 2 rupees per each only. Now for this 24,000 you should need to issue equity shares. Now what is the journal entry, guys? If you are issuing the equity shares or if you are discharging the cash, the entry is reconstruction account debtor to equity share capital 24,000, 24,000. Sir, these diagrams just for explaining, I'm telling you, in the exams directly you can pass the journal entries. That is more than enough. Next, accrued interest on debentures to be paid in cash. What is the entry if you paid the accrued interest on debentures? Accrued interest account debtor to cash account. Come up, accrued interest is how much given here? 22,500. Just to make the payment for 22,500. Okay. Just let me write properly, guys. Otherwise, at the time of consolidating the things and presentation of balance sheet is too difficult. What is the entry? I can't understand. I know anyway you are unable to understand my writing because I make it in little bit speeder manner. But in the PDF, it is properly wrote by me. No worries. Next, come down. Debenture holders agreed to take over freehold property. Why? Debenture holders are the secure debentures. They provided freehold property as a security. Book value of 1 lakh at a valuation of 1.2 lakh in part repayment of their holdings and to provide additional cash of rupees 1,30,000 secured by a floating charge on company's assets at an interest rate of 8% per annum. I know. While giving first time reading, you may not appreciate the whole content. But if you break the sentences as per the given information, if you slowly connect what is given, then you can simply pass the journal entries. Let me read the content once again, guys. Debenture holders agreed to take over freehold property. Book value of 1 lakh. So something first he is talking about freehold property, right? First, let me check about freehold property, what he is talking. First of all, freehold property is there in my books of accounts. How much? Freehold property in my books of accounts I have 4,25,000. So which is 4,25,000 is freehold property book value. Now out of which, how much he is talking? Debenture holders agreed to take over freehold property of the book value of 1 lakh. Now he is talking about only 1 lakh. That means remaining 3,25,000 is other component of freehold property. Now for this 1 lakh, what happens? This is taken over by the debenture holders at a valuation of 1,20,000. Sir, for 1 lakh, is taken over at the rate of 1,20,000 means freehold property upward revaluation only, na? Upward revaluation at the rate of 1,20,000. That is simply at the rate of 20,000, then it will become 1,20,000. If it is upward revaluation, then it will become 1,20,000. I know at the time of upward revaluation, what is the journal entry? May I know? Freehold property account at R. Let me write here. Freehold property account at R. So reconstruction account 20,000. Then freehold property will become as a 1,20,000. Now this 1,20,000 freehold property is taken over by whom? Debenture holders. Am I right? Now you should need to cancel the debentures to the extent of 1,20,000. Asset will cancel, liability will cancel. Debentures for 6% debentures. Now concentrate, come here, come to 6% debentures. Don't make it past the journal entry directory. First check the 6% debentures. Liability is how much? 3,75,000. Out of which 1,20,000 is going to cancel with the freehold property. Cancel with freehold property. What about the remaining? Remaining balance is 2,55,000, which is balance. Now you can cancel the 6% debentures with the given freehold property by passing the entry 6% debentures account at R 1,20,000 to freehold property 1,20,000. Do you agree? Next. Not at over, guys. Debenture holders agreed to take over freehold property book value of 1 lakh at a valuation of rupees 1,20,000 in part repayment of their holdings. Now, out of the debenture holders, part repayment only settled. Remaining part payment is there for 2,55,000. And to provide additional cash of rupees 1,30,000 secured by a floating charge on company assets at an interest rate of 8% per annum. And to provide additional cash, company required additional cash. For that, company issued 8% debentures, which are having floating charge on company's assets for 1,30,000. Indirectly, he is conveying that to augment certain working capital or to get certain money, right now the company is going to issue the 8% debentures further. They are cancelled something, they are issuing further. Now, if the company issued the 8% debentures, what is the journal entry? Bank account at R2 or cash account at R2, 8% debentures account. For how much amount, guys, they are given? They are given at 1,30,000. Are you following, all of you? Sir, in internal reconstruction problems, majorly reading the problem and understanding the problem will create more success rather than concentrating on the general entries. How to pass the general entries, no need to concentrate at all. First, understand what is given here. To provide additional cash, company required additional cash. Further, company issued the debentures. The interest rate on such debentures is 8% per annum. Now, you may have a doubt that what about the other freehold property, balance freehold property? What about the balance debentures amount? Now, for that, if you observe somewhere in the additional information, we not yet read. Here in point number 8, if you check, remaining freehold property to be revalued at 3,87,500. So remaining freehold property means this one only, right? This 3,25,000. They are revalued at which price? 3,87,500. How much revaluation profit we got? 3,87,500 minus 3,25,000. So I got 62,500 as revaluation profit. Now, concentrate, guys. Actually, for this 1 lakh, I am getting 20,000 revaluation profit. For this 3,25,000, I got 62,500 revaluation profit. No need to pass double time entries, 2 times entries. Here freehold property to reconstruction 20,000. Here again freehold property to reconstruction 62,500 actually. On behalf of that, directly you can pass one entry. Freehold property to reconstruction 82,500. If you want in bracket 20,000 plus 62,500. If you made one time entry, that is more than enough. Or if you want, you can pass the 2 times also. Not required actually. That is related to the balance of freehold property. Then what is the balance of this debentures? This might also given somewhere. Just a second. Anything given? Sir, if nothing was given, what I should need to do, sir? Continue as a debenture. Continue as 6% debenture. That's it. If nothing is given. Somewhere nothing is given. I seen 5, 6, 7, 9, 10. Nothing is given. Just you can continue as a 6% debentures. That is about point number 4. Sir, now due to point number 4 and point number 8, the impact is very simple. Due to upward revaluation of freehold property, company is getting 82,500 profit into the reconstruction account, and the 1,20,000 worth of freehold property settled with the 6% debentures. That's it. Next, patents and goodwill to be written off. It was clearly given. If it is given, then only we will write off. Otherwise, no need to write off. If you check while reading the balance sheet, we observed that 2 intangible assets are there. Now, both the intangible assets I should need to set off with the reconstruction account at the end. Just hold it. Inventory to be written off by 65,000. This is also hold it. I should need to decrease the inventory by 65,000. Amount of rupees 68,500 to be provided for bad debt. Sir, for providing the provision for bad debts, what is the journal entry? The normal entry is P&L to PBD. But right now, what is the journal entry? Reconstruction to PBD. So we combinedly will do all these 3 things. All these 3 things we combinedly will do. Just hold for it, because always in the 5th entry, 6th entry, 7th entry, always reconstruction account we are taken as a debit aspect. We should need to taken as a debit aspect. So that's why hold for some time. Trade investment we sold for 1,40,000. You can provide the entry for this. Trade investment in our books, book value how much? Are you with me, all of you? Don't lose the focus. Trade investment, we are having it 55,000. We are selling it 1,40,000. Therefore, entry. Bank account that are 1,40,000 to trade investments account 55,000. Profit how much? You can need to transfer to profit to reconstruction account. How much? 1,40,000 minus 55,000. 85,000 is the profit. This is all about trade investments. Next, come to point number 10. Directors to accept a settlement of their loans as to 90% thereof by allotment of equity shares of rupees 2 each, and as to 5% in cash, and the balance 5% being waived. First of all, director's loan is how much? The liabilities come down. Here it is there if you observe. Director's loan is for 1 lakh. First, you can work out that. So director's loan is given for 1 lakh. Now, how they are discharging such director's loan? 90% through issue of equity shares. For 5% cash. For the remaining 5% waived. Check, 5% is being waived off. Now, you should need to cancel the entire director's loan for 1 lakh. To the extent of 90% issuing the equity shares, that's why equity share capital for 90,000. For the 5% issuing the cash, that's why 2 cash 5,000. Remaining 5% is being waived means to reconstruction account 5,000. So the entry is director's loan to equity share capital to cash to reconstruction account. Okay. Next, 10th over, come to 11. There were capital commitments totaling 2,50,000. What is the meaning of capital commitments? Capital commitments means maybe you are entering into certain projects. You should need to honor that project. These contracts are to be cancelled on payment of 5% of the contract price as a penalty. Maybe company decides that it may not be worthwhile. So if you are honoring that contract, it may incur more than that as well. That's why, as per the penalty clause involved in that particular project, Just we are come out of from the project by paying the penalty. So right now, whatever the case may be, the penalty, whatever you are paying, which is lost to the organization. If it is not paying under the reconstruction process, then the entry is actually penalty to bank. Then penalty should need to be closed and transferred to P&L. Then the entry is P&L to bank. Now we are in the process of internal reconstruction. There is no scope for P&L. That's why whatever the profit, whatever the loss we are attaining, we should need to debit the reconstruction account only. So the entry is reconstruction to bank to the extent of penalty. 2,50,000 into 5,000 means, which is 12,500. So the entry is there any number we are following? No, we are not following any number. So the entry is reconstruction account at R2. Reconstruction account at R2. Bank account. How much, guys? 12,500. Ignore taxation and cost of the scheme. We done all the things except point number 5, 6, and 7. Am I right? So these are written off entries actually. These are written off entries. Before recording this, all of you please let me know how much balance is there under reconstruction account from starting onwards. Please all of you participate with me. Start with your calculator. I didn't see queries box since last 10 minutes. Let me check. Yeah, you are with me, right? Shall we continue? So start with calculator, all of you. First, make it 0 in the calculator. Start. In the first entry, reconstruction credit. Sir, if it is credit, add. If it is debit, minus. Reconstruction credit means 1 lakh. Add 1 lakh into the calculator. Second entry, add 6 lakhs. Third entry, second over. Okay, this is. Where is the third entry then? First, second I wrote, na? Numbering wrong, ah? I think so. This is third entry. Numbering wrong. Just leave it. Okay. Reconstruction to equity share capital. Minus 24,000. Minus 24,000. Let me check this adjustment as well. Anywhere missed out? No. Nowhere missed out. Just numbering wrong. You can continue. Minus 24,000. Next. In this entry, there is no involvement of reconstruction, accrued interest to cash or bank. Next. Come down. Freehold property reconstruction 82,500 means credit 82,500 plus 82,500. Come down. Here there is no involvement of reconstruction. Here also no reconstruction. Here reconstruction 85,000. Add 85,000. Next. Here 5,000 reconstruction. Add 5,000. Here minus 12,500. I got 8,36,000. Before writing those 3 entries, 3 points, before considering those 3 points, reconstruction balance is 8,36,000. Am I right, guys? All of you? Someone is telling 8,48,500. Yeah. Oh my God. I got 8,36,000 na. Right now I told you na. Any of our friends told my figure? Okay. 8,36,000. Super. 2 to 3 persons told. Remaining all, you can check. Just I have doubt on myself as well. Sometimes I will take a different figures in the calculator. Okay. Just let me check through my PDF as well. 1 second. Yeah, it's 8,36,000. No worries. I made it correctly. So the balance under the reconstruction account is 8,36,000. Actually, for the time being, I calculated with calculator. But in the exams, don't do like that. You should need to open the reconstruction account. You should need to open the reconstruction account. For example, in the first entry, if you check, what is the entry? 6% cumulative preference share capital to reconstruction. Only reconstruction impact. Preference share capital to reconstruction. Go to reconstruction. Put it as by preference share capital. 1 lakh. Like that, each and every component, credit and debit, you should need to work out. Then if you close the reconstruction account, then you know how much balance is there. Like that, you are getting 8,36,000. Just to save some our time, I'm not preparing the reconstruction account, but in the exams, please, all of you prepare the reconstruction account. Then you can know the balance. Now, the balance in reconstruction account, all of you, please let me know what you should need to do. It is clearly given that patents and goodwill to be written off, inventory to be written off, and for PBD also you should need to written off. And whether it is mentioned or not, P&L also you should need to nullify. Na? Nowhere it is mentioned you should need to nullify the P&L. But as I already told you in the theory, irrespective of the fact whether it is mentioned in the problem or not, we should always note to set off P&L account debit balance with the reconstruction account. That's why I will do one thing. Please concentrate. First, I will start nullifying with the P&L. To P&L. P&L having a credit balance, I should need to nullify by making credit. P&L is how much? Debit balance, P&L. 5,35,000. So come here to P&L 5,35,000. Reconstruction account, make it debit. How much? 8,36,000. You are using now. Out of which P&L debit, you are cancelling with 5,35,000. Two remaining 3 points, please consider here. Patents and goodwill. So patents and goodwill with which values we have? Patent 37.5, goodwill 1,30,000. 2 patents, 2 goodwill. Sorry, value so much? 37,500, 1,30,000. Fine. Next, come down. Only this point considered. Inventory to be written off by 65,000. Inventory should need to be decreased, means it should need to be credited. Amount was also given 65,000. Next, for PBD reconstruction to PBD, we already told you amount of rupees 68,500 to be provided for bad debts. That is 2 PBD 68,500. All considered, right? Now all of you please make it total of the credit aspects. 5,35,000 plus 37,500 plus 1,30,000 plus 68,500. So I got 7,71,000. Am I right, ma? So one more time, please, all of you cross check, guys. I got the total of credit aspects as 7,71,000. I correctly made it, right? One more time, just I'm cross verifying. P&L 5,35,000. Patents 37,500. Goodwill 1,30,000. Yes. Inventory was decreased by 65,000. Yes. 68,500 is provided for bad debts. So still we are having certain balance under reconstruction account. That balance I should need to make it transfer to capital reserve account. What is the balance? 8,36,000 minus 7,71,000. The balance of 65,000 I should need to make it transfer to capital reserve. That is the problem, yeah. Here I got no balance, na? Calculation mistake or anything here. 5,35,000 plus 37,500 plus 1,30,000 plus 65,000 plus 68,500. Sorry, yeah, this is not 7,71,000. So sorry. This is also 8,36,000 we got. There is no balance. Cross check. I made a mistake. This total mistake. This is also 8,36,000 I got. Sir, after making set off, if there is no balance in reconstruction, what can I do, sir? No need to transfer to any amount to capital reserve. If something is there, then I should need to transfer to capital reserve. If nothing is there, then what should I need to do? No need to transfer. That's it. Please check it, guys. All of you. Any doubt? Yeah, all things nullified. You are correct. Patents I considered here. Earlier calculation I not taken. Na? Okay. Sir, where is 12,500? This 12,500 you are talking, we are already considered in reconstruction account. Na? Have you got the reconstruction balance 8,36,000? This reconstruction balance of 8,36,000 you got after crediting aspects adding and after debiting aspect reducing. Then you got the reconstruction account balance as 8,36,000. Okay. Yeah, no doubt. Still clear, right? Yeah, fine. Now balance sheet. This is the time for balance sheet. All of you, please quickly participate here. Balance sheet of which company, guys? What is the company name? A&D Company. A&D Company Limited. As at 31st December 2011. Here it is there. 31st December 2011 A&D Company Limited. Now, guys, don't forget to add the word unreduced. If you are not adding this word, then they will reduce your marks. They will reduce your marks. Please, all of you add the word unreduced. Next, start with equity and liabilities. Under that, shareholders funds, A share capital. Actually, you should need to go for the note number. I don't want to go to any note number. In the exams, you can go. First, all of you, please calculate equity share capital quickly. Guys, I will open my PDF. There, I wrote the clearly. Let us concentrate these entries one by one. Equity share capital. First, what is the impact in first entry? There is no equity share capital. Second entry, equity share capital credit how much? Please, all of you come this here. Credit how much? Equity share capital 1,50,000. Please consider that one as well. That one only 1,50,000. Third entry 24,000. Please consider plus 24,000. Fourth entry nothing. No involvement of equity share capital. Fifth, no involvement. Sixth, no involvement. Seventh, no. Eighth, no. Ninth is there. Ninth 90,000. Add 90,000. 10th nothing. 11th nothing. I got 2,64,000. In my calculator, I end up with 2,64,000, guys. Okay. You can add this here. Just 2,64,000 equity share capital in brackets I am showing. In notes, actually, I should need to go 1,32,000 equity shares at the rate of 2 rupees each. Then you should need to write 2,64,000. Just for the time being, I'm directly adding here. Next, go for the preference share capital. In the first entry, 3 lakhs. Credit, only credit aspects. Second entry, no preference share capital. Third entry, no preference. Fourth, nothing. Fifth, nothing. Sixth, nothing. Seventh, eighth, ninth, 10th, nothing. Only one thing here, that is 3 lakhs. So 2,64,000 plus 3 lakhs, 5,64,000 is the share capital. B, reserves and surplus. Now, if you go for the balance sheet, sir, we are only having one reserve, that is P&L account debit balance. In the balance sheet, actually, where here. Now, such debit balance was also nullified. And there is no balance under the reconstruction account. That's why we not transferred any single rupee to the capital reserve. That's where reserves and surplus become is nil. Do you agree? Next, number 2, non-current liabilities. Debentures are there. A, come to long-term borrowings. Now, just a moment. Yeah. Now, all of you, please check the long-term borrowings for debentures. First, second entries, no involvement of debentures. Third, also no. Fourth, nothing. Fifth, nothing. Sixth, actually 6% debentures, we have 3,75,000. Out of which 1,20,000 nullified. Balance was nothing was mentioned. That's why it was shown as a liability. So 2,55,000 is a liability. In the other entries, 7th entry, we raised 8% debentures. So we have 6% debentures for 2,55,000, 8% debentures for 1,30,000. Separately, you should need to show in the notes to accounts. Just here for the time being, in our OneNote, what I will do, just I will add one by one. That is 255, 6% debentures, And for 8% debentures, 1,30,000. We issued certain debentures. So 2,55,000 plus 1,30,000. I got 3,85,000. Sir, accrued interest was paid. No need to think about the accrued interest which was paid. Under the liabilities, equity over, debentures over, accrued interest paid, just ignore. Come to current liabilities. Bank OD not touched by me. Trade payables also not touched by me. So as it is, you can consider bank OD and the trade payables. That is number 3, current liabilities, bank OD, that you can put under short-term borrowings. How much? 1,95,000. Trade payables given at 3 lakhs. Sir, what about director's loan wealth? Entirely nullified. If you want, you can cross-check. Director's loan, 90% is paid in the form of equity shares, 5% is cash, 5% is waive off. That's why entirely paid. Don't consider any director's loan here. Hope we consider everything into the liabilities. Then go for the assets. Okay. Under assets, come up freehold property. Come to the PPE. That is non-current assets actually under that PPE. So PPE, freehold property, go for the freehold property here. Sir, out of 4,25,000, we go for upward revaluation of 82,500. Do you agree? We go for upward revaluation of 82,500 combinedly. But out of which 1,20,000, we make it set off with a debenture holders. That's why we are only having 3,87,500 after completion of upward revaluation of balance freehold property. So please all of you consider that part only. That is 3,87,500 only. Do you agree? 3,87,500 PPE. That is for freehold property. Next, come to the problem. Plant. Sir, plant any upward and downward revaluations? Nothing was we made. I think so. 3,87,500 plus plant as it is, you can consider, which is 50,000, right? No upward, no downward, which is 4,37,500. Guys, just be hold for 2 to 3 minutes. We can try to complete this. Next, patent goodwill. Can I consider? No. Nullified with the reconstruction. Trade investments, we sold out. Don't consider this. Current assets, trade receivables, consider. Consider under current assets, trade receivables. But don't consider the entire figure, because out of which we created certain PBD or something. 4,85,000 minus PBD was how much? Check here. Just a second. Sheets were hanged. Yeah. So now if you check, out of that PBD we created for 68,500. So now you can decrease from the given book value of the balance sheet to the extent of 68,500. Then 4,85,000 minus 68,500. Now you can understand how to prepare the balance sheet in the exams. Each and every component you should need to put in your brain. Then consider at the appropriate time. 4,85,000 minus 68,500, which I got 4,16,500. Next, after trade receivables, inventory. Inventory valuation also decreased, guys. Inventory given at 4,25,000. How much value actually we reduced for the inventory? 65,000. So reduce that 65,000. So 4,25,000 minus 65,000, which I got 3,60,000. After inventory, pay and account debit balance already nullified. Next one thing, cash and cash equivalents we should need to consider. Cash and cash equivalents. Because certain cash involvement is there. In the balance sheet, there is no cash was given. In the first entry onwards, you should need to check what is the cash impact. Go to PDF. It will be clear here. Sir, in the first entry, there is no involvement of cash. Second, no cash. Third, also no cash. Fourth, cash outlay is there, minus 22,500. Fine. Come to fifth, no cash. Sixth, no cash. Seventh, inflow 1,30,000 plus. Eighth, minus 1,40,000. Okay. Ninth, minus 5,000. Okay. 10th, minus 12,500. 11th, nothing. If it is negative 50,000, what can I do, sir? I can take it as a bank OD. If it is negative, what I can do, sir? I can put it as bank OD. 50,000. Okay. I'm not making totals here. Just you can complete totals. Please, all of you complete the totals and make it tally the balance sheet. Cash available, sir, cash is not available with the company, then how payment was done? That is the reason why bank OD I told you, na. If cash is not available, then which is a bank OD? Sir, someone is telling 2,30,000 cash debit balance. No, yaar, 2,30,000 I'm getting. Just a second. I will clarify at this stage here itself. Just a moment. Something we are getting a positive balance. Guys, one thing. I'll do one thing. I don't want to make it do it in hurry manner because which is preparation of balance sheet. Please, all of you try the balance sheet accurately. I know somewhere some clerical mistakes were happened already. Something is not tallying from my side. You can do one thing, all of you. Please make it try to complete the balance sheet from your end as an HW. Okay, I already told you the entire journal entries. I will clarify the entire balance sheet in the next class because in hurry burry I am doing. I know the entire journal entries perfectly we done and there is no balance in reconstruction account as well. Please, all of you make it possible to complete the balance sheet from your end. Try it. Then I will once again repeat the entire balance sheet. Then you can cross verify how far you handled it. Okay. Or otherwise, if you are having any mismatch, it will be clarified in the next class. Okay, guys. Until bye-bye. Have a nice day.